How to invest during market crash for best returns. Stock market is crashing for last 2 weeks and Nifty has dropped 31% from its high so far. During market crashes, people make either of these two mistakes. Number 1. People invest too early in few lump sum tranches thinking the market has bottomed out only to see market crash further and further. In general, they run out of cash even before market crash gets worse and they'll panic. The second set of people will invest too late after the market has bounced back. They will wait for market to fall further and further as they want to invest at the real bottom. But remember, no one can know what would be the real bottom. These people just wait and end up missing the golden opportunity. So, let's see how to invest properly and systematically during this market crash in this episode of Market Secrets Investment Series. Before we get started, here are the few things I want you to remember. Number 1. Investment plan mentioned in this episode is my own investment strategy. Don't follow it blindly. Adjust it based on your goals and surplus cash. 2. We have released a video 2 years back about the market crash happening in 2019-2020. We have clearly mentioned Nifty will crash from 12k to 6k anytime. So I have accumulated good enough cash to buy during the crash. I'm very well prepared for this crash, so no panic. If you're going to adopt this strategy, you should never panic. Number 3. If you want to understand why market is crashing, till where it will fall, how it will fall, when it will bounce back, watch the video we released 2 years back. It will have all the details. I'll leave the link to the video in the description section of this video, or you can click at the top right corner of this video right now to view it. With that being said, let's get started on how to invest during market crash. First things first, observe how the market is crashing. Number 1. Market is falling too fast. This indicates when the market goes back up, it will happen really slowly. Every bounce will be shorted heavily. Number 2. Observe what happened on yesterday, which is March 13, 2020. Nifty dropped 10%, hits the lowest circuit and then bounced back and closed 4% up from previous day's close. It is pure V-shaped recovery. In general, V-shaped recovery during the crash is a sign of weakness, so market will definitely fall again. Number 3. Market is crashing due to just the fear of coronavirus. There is no economic impact yet on huge scale except for China and Italy. Economic hit all over the world will be realized only in the next 2-3 quarters. When that happens, we will know the real impact and a lot of small and medium-sized companies may go out of business by then. This will raise default rates on the bonds and will eventually lead to bond market crash. If that happens, there's a chance of prolonged slowdown in the world economy. So market will crash hard again. Number 4. The last bull run was longest in the history, so this bear run will most probably deepest or longest ever. Either of these two should happen, which means we may take 3 to 5 years or longer to bounce back, or market may drop below 50%. Around 60 to 70% crash is possible as well. Now, how to invest during this scenario? First, you should have a basic investment plan. Now, what is basic investment plan? Number 1, it should have a clear goal. Have a clear goal on why you are investing. Mostly it is for retirement, which is a long-term goal. Number 2, develop a discipline of investing regularly. This is nothing but your regular monthly SIP. Number 3, develop and stick to what if things go wrong plan. Now let's see a simple example of basic investment plan. Number 1, it should have a goal. My goal is simple. It's retirement. I can have multiple short-term goals within it. Target is 10 crore by 2030. I'm using this amount and year just for illustration. These are all not actual numbers. Number 2. Develop a discipline of investing regularly. I have a regular monthly SIP of 20,000 rupees. Again, the amount mentioned is just for illustration purposes. This regular monthly SIP of 20,000 rupees will never be cancelled or stopped. Whether it is a bearish market or a bullish market, it doesn't matter. I will continue to invest through SIP. Also, I'll increase this SIP by 10% each and every year. This 20,000 is being invested in selected stocks and mutual funds every month. Step 3. Develop and stick to what if things go wrong plan. What if things go wrong plan is the strategy you should invoke every time market crashes or corrects by more than 10%. This is the most important part. Let's see it in detail. What if things go wrong plan? The main objective of this plan is to reduce the number of decisions I will be making during the market crash. Because I might be emotional due to fear or greed when the market crashes, and being emotional might push me to take wrong decisions. So I will preload my decisions for the falling market and reduce or totally remove the number of decision makings during the market crash. My what if things go wrong plan has two basic rules. I won't invest in any new stocks or mutual funds if and when market crash happens. I will simply increase my investment to the stocks and mutual funds that I am currently holding. Number 2. I will not deviate from my investment plan regardless of whatever news, issues or reasons. No excuses. Market may crash due to speculation and leverage, which is simply people's greed like in 1929, or due to oil crisis like in 1987, or due to Asian currency crisis like in 1998, or due to dot-com bubble like in 2000s, or due to financial crisis like in 2008, or due to virus and pandemic like right now in 2020, or it may even crash due to the chances of world war or an alien invasion or an asteroid strike. It doesn't matter. It just doesn't matter. Every crash may have a reason and people will say this is different. This time it is different. It may not recover. But I won't believe in any of those arguments. Life is a cycle. Whatever happened in the past will happen again and it will continue to happen. So I'll stick to my investment plan by ignoring all the unwanted noise. I'll stick to my investment plan. There's no deviation allowed in my investment plan. So, what are my plans for investing during the market crashes? I have clearly written down what I'll do if the market crashes or corrects 10%, 20%, 30%, 40% and 50%, and I will blindly follow it during market crash and corrections. So, when the market is down 10%, I'll increase my monthly investment by 50% by manually buying stocks or mutual funds on the same day the 10% is breached and until the market moves above 10%. To be clear, if market crashes by 10%, increase monthly investment by 50% and buy the stocks or mutual funds on the same day and on the first working day of every month until market moves back above the 10% mark. Just remember the word first working day of each and every month. So if market crashes by 10% on February 15, increase the monthly investment by 50% and buy stocks or mutual funds on the same day, which is February 15, and on the first working day of every month, that is March 1, April 1, May 1, etc., until market moves back above the 10% mark. If regular monthly investment is 20,000 rupees, increasing monthly investment by 50% will make it 30,000 per month from now. This is for 10% correction. Let's see about the rest. When market is down 20%, double monthly investment by manually buying stocks and mutual funds on the same day 20% is breached and until market moves above 20%. If regular monthly investment is 20,000 rupees, doubling monthly investment will make it 40,000 rupees per month from now. When market is down 30%, triple the monthly investment by manually buying stocks or mutual funds on the same day 30% is breached and until market moves above 30% mark. If regular monthly investment is 20,000 rupees, tripling monthly investment will make it 60,000 per month from now on. When the market is down 40%, increase monthly investment 5 times by manually buying stocks or mutual funds on the same day 40% is breached and until market moves above 40% mark. If regular investment is 20,000, increasing monthly investment by 5 times will make it 1 lakh per month from now. When market is down 50%, invest 50 to 75% of your current debt corpus or cash immediately in stocks or mutual funds and have the remaining corpus for investing during the recovery. Please note, as per the rules mentioned above, these additional investments should go to the stocks and mutual funds that I am currently and regularly investing in. No new stocks or funds are allowed, but I'll continue to do regular yearly review of my portfolio. Now, let's take an example. In January 2020, market was normal, so my investment was also normal. I have invested 20,000 rupees through SIP and I didn't do any additional investments. So total investment in Jan is 20,000 rupees. Please remember this 20,000 rupees SIP amount used here is not my actual investment amount. It is just for illustration. Now, on February 2020, after a long time, Nifty crashed below 10% on Feb 28. So I immediately increased my investment by 50%, which is 10,000 rupees. I bought mutual funds and stocks worth 10,000 rupees on the same day. Total investment in February is 20,000 rupees in SIP and 10,000 rupees in additional investment. So in total it is 30,000 rupees. Now let's move on to March 2020. Do you remember what I mentioned previously? If market crashes by 10%, increase monthly investment by 50% and buy stocks or mutual funds on the same day and on first working day of every month until market moves back above 10% mark. Just remember the words first working day of each and every month. On the first working day of March 2020, Nifty is still below 10% from the lifetime high. So I bought stocks or mutual funds for another 10,000 rupees. From the regular SIP, 20,000 will be invested in March. Total investment so far is 30,000 rupees in March. On March 12, Nifty went below 20%. So now I need to double my regular monthly investment. Remember, regular monthly investment is 20,000 rupees. So I need to invest 40,000 rupees totally this month, out of which 30,000 is already invested. So I'll invest 10,000 more on the same day. So the total investment is 40,000 rupees in March. Then again on March 13, the next day, Nifty went below 30% mark, but bounced back to 20%. But rules are rules. So now I need to triple my regular monthly investment. Remember, regular monthly investment is 20,000 rupees. So I need to invest 60,000 rupees totally this month, out of which 40,000 is already invested. So I invested 20,000 more on the same day. So what will I do in April 2020? Currently, market bounced back from 30% drop and it is at 19.9% from lifetime high. So it is not even below 20%. If Nifty stays above 9945, which is 20% mark, I'll invest 30,000 rupees in April, which is 50% increase in my investment as per the rules. If it goes below 9945, which is 20% mark, but stays above 8702, which is 30% mark, I'll invest 40,000 rupees in April, which is double of my regular investment as per the rules. If Nifty goes below 8702, which is 30% mark, I'll invest 60,000 rupees in April, which is triple of my regular investment. If Nifty goes below 40%, I'll invest 1 lakh in April, which is 5x of my regular investment. And this will continue each and every month. You can modify the plan according to your risk profile as well. For example, just increase your SIP by 2x of the drop. So if your SIP is 20,000 rupees, for 10% drop, you can increase SIP by 20%. So you can invest 24,000 rupees per month. For 20% drop, you can increase the SIP by 40%. For 30% drop, you can increase the SIP by 60%. For 40% drop, increase SIP by 80%, and for 50% drop, increase the SIP by 100%. Or you can increase the SIP by same percentage of the drop. So if your SIP is 20,000 rupees, for 10% drop, increase SIP by 10%. For 20% drop, increase the SIP by 20%. For 30% drop, increase the SIP by 30%. For 40% drop, increase the SIP by 40%. And 50% drop, increase the SIP by 50%. You can modify the plan according to your risk profile and the cash in hand. You should have a good amount of cash to follow this plan. Even if the market continues to go down for the next 2-3 years, you should have enough cash to invest as per this strategy. So, create a plan based on your current cash holdings. Remember, all these calculations of 20%, 30% drop and the reminder to invest additionally are all automated. I will just get a message automatically on when to invest based on the plan mentioned above. If you want, I can create a group and send those automated messages to you automatically. It is completely free. If you are interested in it, leave a message in the comment section of this video. If there is enough interest, I'll create a group and share the link to you guys directly. Also, when you are investing in the market using this particular plan, 1 or 2 days of delay is totally acceptable. For example, in some days, the market might even crash 40%, and due to technical issues or something, you may not be able to invest your planned capital on that particular day. It's okay. You can invest on the very next day or even one more day after that. Invest at the earliest when this condition is invoked. A delay of 1 or 2 days is totally acceptable if there is a valid reason. Also, if you want to have a quick check on these Nifty levels and how much market has fallen from the peak, you can check our website. You'll have a live feed. I'll leave the link to the website in the description section of this video. Also, I'm putting in a lot of effort to create these contents for you. A 10-minute video takes 8 to 10 hours of my time. So if you found this useful, please share it with your friends. It will take only 10 seconds of your time. Just share it on your FB or WhatsApp status. That is the only thing I expect from you guys. If this video hits 25,000 views in 15 days, I'll share my personal portfolio of stocks and mutual funds I'm investing in. As always, hit the like button if you enjoyed this video, and if you have any queries, please leave it in the comment section of this video. I'll be happy to address them all. Thanks again for watching. Have a great day. Goodbye.